Hello and welcome to On Luxury, a channel in which we provide you with the best in luxury from around the world and all carefully sourced from the 1% Club. Now before we kick off, make sure you subscribe to the channel and leave a comment below saying I subscribed, and we will try our best to personally reply to your comment. So let's go ahead and get straight into the video. Apple made headlines this week when its stock rose to over $467 per share in intraday trading, becoming the first US public company to achieve a market cap of $2 trillion. This outmatched the other tech firms Amazon and Microsoft, which chalked up $1.65 trillion and $1.59 trillion respectively. This is not the first time Apple has pipped its rivals to the post, as it was also the first publicly traded company to surpass the $1 trillion market capitalization back in 2018. The only other company to reach the $2 trillion level was state-backed Saudi Aramco after it listed its shares last year. However, due to the oil price wars earlier this year, the stock value has dropped back to $1.8 trillion. Now, in order to attain this historic benchmark, Apple's stock price has risen more than 59% so far this year, which is impressive considering the 86% growth in 2019. This year's advance has expanded the company's market cap by nearly $700 billion. To put this in perspective, that's like adding Cisco Systems, Oracle, Salesforce.com and Zoom Video with room to spare. Apple really have been helping set new standards in the tech world. As I'm sure you are all aware, Facebook bought Instagram and WhatsApp. Alphabet, the owners of Google, bought YouTube and Android, and Amazon bought Whole Foods Market. People always imagine the things Amazon can buy with its huge piles of cash, with the latest speculation last week that they may well bid for TikTok, but the company has since denied it, stating, and I quote, "Apple doesn't buy growth, it builds it." As exciting as it is to see Apple hit another financial milestone, it is important to remember that it is completely arbitrary, and that while the new high has made for some great headlines, it has little to do with the ongoing potential of Apple's business. In fact, when Apple hit the $1 trillion mark in 2018, there was a pullback shortly after. We are going to look at what has led to the iPhone maker's impressive stock price and try to make sense of the question everyone is asking: should I buy or sell Apple? It would be sensible to note the performance of Apple's stock this year, considering the underlying macroeconomic conditions. The pandemic has resulted in near economic chaos, which the stock market has largely remained steady, albeit after initial wobbles in February and March. Now in a COVID world, companies with business models that support the stay-at-home and remote working environment thrived. Industries such as digital payments, streaming music and video, and cloud computing have all seen vast growth. Tech firms, which have primarily been viewed as winners, despite lockdown, have seen their stocks surge in recent weeks, even though the US is in recession. Naturally, given the diverse range of services and products Apple has, this new culture played to several of Apple's strengths this year, with Apple Pay, Apple Music, Apple TV, and the App Store all faring better during lockdowns. On top of this, legendary Berkshire Hathaway CEO Warren Buffett began purchasing Apple over the past years, that now amounts to a holding of more than 250 million shares. Given the size of this portfolio, I'm sure it's a large financial gain even by Mr. Buffett's standards. Buffett was quoted as saying, "We bought about 5% of the company. I'd love to own 100% of it." Wouldn't we all, Warren? Wouldn't we all? Now let's look at the stock split. When the third quarter results were announced, this was not the only thing to excite investors, as the company surprised the street when it announced a stock split at the time. Now the supposed reasoning behind the split is so that Apple stock can be more accessible to a wider base of investors by lowering the price from roughly $460 to $115. The dynamics of the 1-for-4 split are pretty straightforward. If you own 1,000 shares today, You will have 4,000 shares after the split, but the new price will be just 25% of the current price. In its simplest terms, it is essentially exchanging a $20 bill for 4 $5 bills. Mathematically, stock splits don't matter, but the market sees them as a statement of confidence that you do not foresee risk of decline. It can't be denied that Apple shares have been one of the year's stellar performers, and investors are hoping they will continue to rally once the stock split goes through at the back end of August. Now, the question everyone's been asking, is Apple a buy stock, or to hold, or not to hold? The company's ability to leverage strong revenue and income hasn't changed, and Apple has additional catalysts going forward. With the ongoing transition to 5G, analysts will be looking to this to keep the party going. Also, with the continued strong growth of the company's services and wearables business, there is talk that its market cap could go on to surpass $2.5 trillion in the coming months, and even $3 trillion years ahead. However, let's not discard the previously mentioned stay-at-home trend due to COVID and the possibility of pulled forward revenue, in particular in sales of iPads and Macs due to kids not being at school and parents having to do the homeschooling. It will be interesting to see how unit sales compare in the next quarter. One of the biggest drivers of Apple's success is undoubtedly the iPhone, the game-changing smartphone which appeared in our lives around 2007. This ignited years of huge growth and created a loyal base of customers wanting to buy Apple products and services. But iPhone sales have slowed due to users holding on to their handsets for longer periods between upgrades. However, the company could be on the brink of a major upgrade cycle with its first 5G phones due out this fall. It is important to note that we are not financial advisors, and any decision on whether to buy or sell shares should be made while seeking financial advice. So, should you sell Apple here? Well, that depends. If you think the new iPhone will be a disappointment and the services offered will slow, then perhaps yes. However, if you think the momentum of the 5G rollout will push and carry Apple shares up even higher, then perhaps not. But Apple at $2 trillion is no longer cheap. But in our current world, does it sound so crazy? Regardless of your position, Apple has been an American success story multiple times over. Innovation has been at the centerpiece of the company's strategy from the start, and it is clear to see that it continues to be at the heart of the brand's appeal today. So, what do you think about Apple's $2 trillion market cap? Do you see it pushing on, or a pullback coming? And let us know if you would buy, sell, or hold the stock. Share your thoughts in the comments down below. As always, remember to stay on luxury. If you enjoyed the video, make sure to leave a like and subscribe.